Wow, this is incredible for Tesla. Tesla must have been reading the room because they basically reported bad numbers, but gave us exactly what we wanted to hear, where we wanted to hear it. I was highly concerned that margin for Tesla would come in under 16%, but margin X credits actually came in at 16.4%, better than expected. Congratulations, Tesla. Margin with the regulatory credits, 17.4. Part of that is not only because costs are falling for Tesla, freight costs and input costs, which is less inflationary, which is good, but it's also because Tesla is taking advantage of more vehicle credits because less of the competition is taking advantage of vehicle credits. So there are more vehicle credits available for Tesla since they're the US manufacturer focusing on EVs and others are focusing on EVs less. Now, the big win from these numbers from Tesla came down to the potential for more affordable vehicles. This was a really critical part of the Tesla earnings release. And we can actually see that on screen right here. We have updated our future vehicle lineup to accelerate the launch of new models ahead of our previously communicated start date in the second half of 2025. And so basically what they're saying here is, hey everyone, look, we heard you that you really value cheaper cars. So here's what we're going to do. We are going to push the current production capacity from about 2.3 million all the way up to about 3 million vehicles. And they didn't give us a time frame for when they want to get to 3 million vehicles, but they want to get to 3 million vehicles, or at least close to 3 million vehicles before they manufacture another gigafactory. So hold your breath, Giga Mexico, Giga India, Giga whatever is probably not going to happen for a while. That's going to get kicked down the road. Instead, we're going to take that CapEx money and we're going to spend it on AI so we can get closer to Robo Taxi. And rather than waiting for the next generation manufacturing lineup, what we're actually going to do is we're going to take what we've already bettered and we are going to make the manufacturing line more efficient now so we can bring our costs down for vehicles, potentially then reduce prices, also with, as we've said before, potentially these lower cost existing vehicles, but also potentially with lower cost new vehicles. So a big shift here from Tesla. This is very good. So I do like to see this. This is fantastic. Now, what it does is it implies, and we'll see in the earnings call what we get, but it implies that we could end up getting multiple new vehicles, and that is just juicy to Tesla shareholders. Tesla shareholders want to hear that. So great news, Tesla here. Again, Tesla read the room very, very well on that. Now, something else to note about Tesla is we did have the expectation that revenue growth or production growth would be, quote, notably lower. So that's unfortunate. So that means things are probably still going to get worse in the realm of deliveries until they get better. But at this point, that might be mostly baked into the valuation of the company. So instead, they're going to continue to focus on getting those costs down, stabilize their deliveries and production, and they could end up releasing more than one affordable model. Well, again, we'll get clarity from Elon on the earnings call, which we'll cover later. Now, it's worth noting Bloomberg suggested that 87% of the car market sells above $30,000. So and this is in the United States. So they kind of suggest, hey, maybe you don't even really need a $25,000 car. Maybe you just need more variety at a $30,000 car. That's entirely possible. $30,000 car instead of $25,000 car. Now, the question is, when are we going to get that more affordable car? Well, that remains to be seen. And so we'll see what gets talked about in the earnings call. Now, as far as some negatives, we did have negative $2.5 billion of free cash flow, though we do have quite a pretty penny of cash on hand. And Tesla did recognize some more FSD income because they released Autopark. Now, I thought that was a little bit of a funny reason to take FSD revenues, but that's what they chose to do. So if you look on their balance sheet, you'll actually see they've got about $26.8 billion of cash, And then as far as other current assets, including accounts receivables, inventories, and prepaids, which I generally don't use prepaids, but those do offset some costs. We'll just do 16 plus 3.8, puts us at about 19.8 in receivables, plus about 26.8 in cash, minus 14.7 in bills to pay, minus 9.2 in bills to pay. That does, if we do include receivables and the inventory, that does put us somewhere around $22 billion of available current assets. If we just wanted to look at free cash to be a little bit more sort of acid test-ish, this is sort of Kevin's version of it, we're down to about $2.9 billion of cash, which is not a great amount of free cash. You don't actually have that much free cash at Tesla. So you are doing a lot of bill management. And if you have another negative $2.5 billion quarter, well, let's just say that free cash is going to start dipping into receivables very quickly. And while, yes, at this point, it seems like they've got enough money to finance all their activities, there could be some bumps in the road during 2024. So I don't think by any means 2024 is out of the woods, but this is clearly part of the bottoming process for Tesla that the stock performance has been in, and obviously the changes that are now occurring at Tesla. So those are all things to pay attention to. Now, something else to consider is if we go, and we'll do a valuation model again in just a moment, but I just want to make sure I hit the core of this report. Again, they're taking the best parts of the new production line, the Robo Taxi. They threw up some mock-ups of the Robo Taxi event. This was very good. Again, we're not getting a disclosure on solar. We're probably not getting Giga Mexico or any other Giga for the time being, and they are expecting notably lower sales from 2023. This is not a surprise, though, at all. Instead, Tesla is teasing this, which is the Robo Taxi app, and this would be hold to order your Robo Taxi. They're throwing in estimated wait time 3 minutes. 3 minutes away, you could set the climate, which is kind of cool. You could set the music. You could set the volume of the music. This is actually kind of cool. I don't disagree with this. I think this is very smart. I like the mock-ups. They're just mock-ups, so for what they are, they're not extremely valuable right now until we actually go into launch mode, and that is going to require the vehicles being fully autonomous and having regulatory approval, which maybe we'll get some guidance on that in the earnings call. But as of right now, the stock is up 9%, which is really good. The expected move on Tesla stock today was 8.2%, and we are nicely bouncing off some longer-term trend lines here. These have been, there's some longer-term support lines just below where we are, depending on how you draw them. Some say we bounce off them nearly perfectly. You are sitting now at about just above that 152 level. Next stop for Tesla would be really to decide, are we going to stay below 160 or are we going to go back up to 170? So that creates some interesting opportunities, and it's worth doing a quick little valuation update on Tesla. So let's go get the spreadsheet and play the valuation a little bit. And I'm going to change some of these numbers here just so we could play with them together and see where the actual value is going to come from investing in Tesla. I think that'll be super valuable. So let's jump into doing that right now. Quick reminder, we do have the courses on building your wealth with an expiring coupon code on April 30th, which is the day before the expiration of the House Hack fundraise. You could go to househack.com/2024. Here's our Tesla spreadsheet. househack.com/2024. Be part of the roadshow that begins tonight. Next 8 days, we got a roadshow, and then we got about a week for that next coupon expiration. So let's play some numbers here. What I'd like to do is actually bump the Tesla margins for 2026. I'm really optimistic about seeing some of this cost reduction, though I'm going to go with two versions here. I'm going to go with let's go play this like this. Let's go move everything to 3 million vehicles. Mind you that 3 million vehicles, they did say close to 3 million vehicles. So 1.8 times 1.3, 1.3, that'd be about 30% production growth. I don't know if we're actually going to be able to sell that many vehicles. So I'm actually going to discount this a little bit. I'm going to go with 2.5. I'm going to get rid of these headlines here. We're going to go with 2.5 million vehicles by 2026. Actually, you know what? Let's go with a lower one. Let's go 2.250. Let's go 2.5 million vehicles. Let's go 2.75 million vehicles, and then we'll go 3 million vehicles in our more bullish case scenario. Then for Robo Taxi revenues, what I like to do is I like to do a percentage of Uber. So what I'm actually just going to do here is I'm going to put about $37 billion of revenue that Uber is able to make. And we're just going to create or use a percentage of that. So we're going to, again, go with $37 billion here. 37 billies. There we go. Let's go ahead and write that in. It's always entertaining writing these large numbers. And then what we'll do is we'll create a percentage for each of these. So this one's going to be times 0.10%. And what I'll probably do is grab, let's do this. We'll probably go with a lower percentage for each of these other scenarios. So we're going to go over here and we'll go with 0.75. Here we'll go with 5% of Uber, and I think we could floor out at about 5% of Uber. We shouldn't do that. Well, let's go with like 2.5% of Uber. There we go. How much revenue we might be able to keep. Now, the other thing that I'd like to do is remind you that I'm going to go with a 50% margin on these because you still have to make the car, you're going to have to service them, and we're only going to 2026. Obviously, in the future, we expect the margin to be a lot better. I also reduced energy a little bit to about a little under 8% because I'm not sure we're going to get that much growth with these higher interest rates, assuming obviously we don't go into a recession. Everything changes if we go into a recession because interest rates will come down substantially faster. Now, I want to run this two ways. I'm going to run this one time at 18% margin, and then one time I'm going to run this at 80% margin. And you'll be able to see some differences here. Quick fact check, we got 50% on margin for Robo Taxi, 82% on the expenses for the actual vehicle sales, 19% tax rate. Okay, fantastic. This gives us a price target on the low side, the bearish side, with a 20% earnings growth of about $150. Now, I think that might be a little low. Let me see here. That would, yeah, that's probably a little low. We probably need to be closer to 25, maybe even honestly 30% revenue growth. So 30 gets a little stretchy, but let's go with it. If I go 30% revenue growth over here, I could get to 225, 2026 in the more bearish case. This is actually decently bullish. If I stick at 20%, we're kind of where our pricing is now. So you kind of bottom out around this 150 level based on these fundamentals here. And then of course, everything beyond that is icing on the cake. That's usually how I like to invest. I like to look at my leftmost figure and then we grow from there. Obviously, if we could get to a 30% earnings growth and we get the highest level of deliveries with a good margin here, we're going 18% in this case, we can knock on the door of that 358 again. Now, if we can then hop on over and get margin to like 80% or something like that, well, then we could really get these numbers to move up even more from 250 to about $400 per share. So not bad. Now, do keep in mind, this also includes FSD revenues at 18% recognition for the three most numbers. It includes nothing for the leftmost number. So if I include the leftmost number and I include expenses on AI, let's see here, AI, FSD. Okay, these numbers, I'm sorry, we're gonna have to move this up. We're gonna have to move up the expenses on FSD. Those expenses are way too low. We're gonna spend way more than $267 million on this. So I'm actually gonna go with, honestly, 50% is also probably kind of low until 2026. But let's go with 70% expenses. That's gonna have our annual, remember these are annual numbers, annual expenses at just under $2 billion. We just spent $2.5 billion on CapEx. And I think it was like $1 billion on AI in one quarter. So I think 70% is probably the best we really want to go here. That is gonna lower some of our numbers, but again, they're still actually pretty dang decent. So I have to give credit where credit's due here. This is good. And depending on what we hear from Elon here on lower cost vehicles, will really sort of dictate what direction Tesla ends up moving here. So overall, I have to say these numbers are much more impressive than feared. I am obviously concerned about a large negative free cash flow. I'm concerned about how quickly we can realistically get to Robo Taxi, because that's the other thing I want you to keep in mind. This model we just made does assume we're going to Robo Taxi. If I go in here and I go ahead and just kill Robo Taxi for 2026, let's say Robo Taxi just doesn't fly. Okay. And that was at 20% margin. And we go back to the 18% margin. This is probably your more bearish case, right? So 18% margin, and the robo-taxi sector gone, with a lot of FSD revenue being spent on commute. You're still at a low of about 229, unless of course the EPS growth rate sucks, and then you're at a floor of about 152. So I think you floor out probably about 152, which is roughly around where the stock is trading right now. So that's good. This is definitely better than expected. I'm a data person. I like these numbers. Now, is it possible that Elon Musk is going to say something loony on the earnings call? Duh. Is it possible that we end up going into a recession? Duh. So these are things that we're going to have to contend with, along with the fact that rates are likely going to stay higher for much longer than we've previously anticipated. And those create some other risks for the market as well. So next, we're going to have the Tesla earnings call, and we'll cover that next. But just remember, on April 30th, the Stocks and Psych course will have an expiring coupon code. I want you to take a peek at one of the trade alerts we sent today. I made some money on it as well, and it had everything to do with this 145 line we drew on Tesla, and just the rejections we were getting. You can actually see us talk about this live in the course member live stream this morning. So we do those every day the market is open. So check those out before April 30th, and email us at staff@meetkevin.com should you have any questions.
Advertise these things that you told us here. I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than Househack, nor am I presently acting as a market maker. Make sure if you're considering investing in Househack to always read the PPM at househack.com.